welcome. Welcome to this very sunny, very sunny engagement. It's indicative of how wonderful a time we'll have together. We really are happy to have you here, members of the media, because for us, we had a series of engagements. They're still continuing, and Governor will speak a little bit about that. And we felt that at this time, it was the right time to meet with members of the media, because you are so important, not in your own right, but just because you also convey messages to the public, and that's really, really critical. So we are really happy to have you, members of the public, joining us via our live stream on our website and our social media platforms. Thank you for joining. So this morning, we have our relatively new governor, although it feels like he's been working with us for a long time, and I suspect he feels that way too. We have him doing a presentation and then an open discussion, and we will then, once Governor concludes his presentation, open the floor for any questions you may have. Those of you joining via the live stream, be assured that we will take your questions, and once we're able to cover all, we will try to cover as many questions as possible. If we don't get to all via our info account, we will certainly get back to you. So thanks again. Enjoy the morning. I hope you enjoyed breakfast. And I just want you to welcome Governor Larry Howai to the podium. Yes, warmly. That was the right, yes, warmly. Thank you.
Yeah, I know we don't really applaud people at press conferences, so I appreciate that. As Nicole just indicated, I have been, in this seat for just over 2 months. And during that time, what I've tried to do is to meet with all the various communities that interact with us, to get a sense of what are some of the top of mind issues that need to be addressed. And also to familiarize myself with issues that help me to get to the point where I can prioritize things properly. So this morning's session is part of that outreach program. But of course, I can't meet with the media without at least giving some kind of indication of what is happening, because you are the national community that I'm meeting with here. I meet with them vicariously through you. And also, very important for me is the questions that you ask. The questions that you ask tell me what are the issues that the general public think are very important. And therefore, on the basis of that, I can then formulate how I go about dealing with the challenges that we face and how we prioritize those, and how some of the policy measures we are likely to implement are likely to affect you, the ordinary person. So really, at this stage, what I want to do is to take you briefly through an overview of where we are right now. It will help to provide a little bit of context for you. But at the end of the day, I think you all came with all your questions. And online, of course, we have a lot of questions that are already formulated and in the process are ready to be asked. But give me about 15 minutes so I can just do my presentation, and then I'll open up for questions. Basically, what I'll cover is a review of current economic conditions, a review of the foreign exchange market, and then we'll talk about some issues that we need to address. Most of you would know the GDP numbers, or real GDP has been very up and down. We had a very significant fall off in 2016-17. Remember, in 2014, oil prices had started to decline. So, and continued to fall. And in fact, one day it actually went negative, just for the day, and then it turned around. So a lot of what you're seeing here reflects a lot of what has been happening in the oil and gas sector, as well as in output locally for us. We started to see a bit of an upturn over the past couple of years, and in 2024 we showed growth of about 2.5%. These are figures that the CSO produces, not what central bank produces. Central bank relies on the CSO for these numbers, right? So we showed a bit of growth, but even with this growth, we're still not back in absolute dollar terms, real GDP terms, to where we were in 2015, right? For the first quarter in this year, we believe the economy actually slowed, and we think we would have probably had a contraction anywhere in the region of about 2% during the first quarter of this year. But our numbers are rough estimates. They're not hard numbers, because what we do is we don't have the same structure for collecting data that the CSO has, and therefore we rely on the CSO. But their data is there's such a lag. We think it's important for us to actually get some kind of indicators of where we think the numbers are and what is happening with the economy, so that we could make the appropriate kind of monetary policies that we need to put in place. So what we do is we look at some proxies. We look at the index of retail sales. We look at the sales of cement, so we get an idea of what's happening in the construction industry. And we also take a look at LNG production. But more than just LNG production, and more than these three, there are a number of other indicators that we use, right? Vehicle sales, a number of other things. So using those numbers, we project out what we think may be happening currently. So what I'm saying about a softening of the economy in the first quarter of this year, going into the second quarter of this year. So we think the first two quarters will have been pretty slow. Our estimate is a contraction of about 2%. Inflation, though, is well under control. We don't seem to have the same problem as some of the developed countries. In the United States, it's over 3%, it's close to 3%. In Europe, it's higher than 2%. So we are currently well managed as far as inflation is concerned. The inflation rate, our core inflation is about 1.9%. Headline is about 1.5%, I think. And food inflation is just over 3%. So that's the one that has the highest level of inflation, food inflation, and that pulls it up a bit. But overall, at 1.5%, inflation is relatively well managed. Unemployment is low with a caveat. And that's why I put the force participation rate here, because you could see it used to be here, our labor force participation rate, right? At this level, and you have to read it off of this side of the graph, right? Which says it was about 61% participation rate, and it's now at 54%. The left slide, the left part of the graph, the numbers on the left side deal with the unemployment rate itself. So this side is the participation rate, and that side is the unemployment rate, right? So participation rate has dropped from about 61% to about 54%. Now, we don't know why. It could be discouraged workers. A lot of work has to be done on that. But if it is discouraged workers, it basically is telling us that our number at about 4.9% for unemployment is in reality a lot higher than that, because we really have 7% of the labor force who stop looking for work, right? So the number is probably a lot higher than the number I am showing here of about 4.9%. But officially, our official numbers say that our unemployment rate is 4.9%. Our fiscal space is constrained, and it has remained constrained over the years. What this is showing is our non-energy fiscal balance and the overall fiscal balance, right? The difference between the two is really our energy balance. So our energy balance is favorable. Our non-energy balance is unfavorable, right? This is the rest of the economy other than energy. So what this is saying is that the inputs into the rest of the economy gives a is heavily dependent on what is happening in the energy sector to sustain our current position. So to keep the government's fiscal deficit this small is really dependent on what's happening in the energy sector. The foreign currency reserves, our import covers continue to come down. And basically, you know this already, right? This is where our reserves were in 2015. And this is where it is in 2024. And Anthony asked me some very perceptive questions about that, but I'll leave him to ask it publicly after I finish my presentation. Basically, this continues to go down. If this continues to go down, this will be a significant challenge for us as a country, because everything that we earn, everything that we consume really is imported. So if this continues to go down, our ability to import more things will become more and more constrained as this becomes tighter and tighter. And I'll talk about that just a little bit more, right? So this shows what has happened with our reserves over the last period of time. And one of the things that we have to look at is the interest rate differential. Right? Now, what this does here, this is saying where it's above the line, this is saying that our rates are higher than the US rates. So this is where we were in 2015 with our Trinidad rates, there being a differential between Trinidad rates and US rates. This here is where we are today, which is that our rates are lower than US rates, right? So US rates here are higher, so we have a negative differential between our rates and US rates. Now, why is this important? Actually, in just having a little discussion beforehand, people were complaining that they could put their money in the US and get a good rate of interest, and they put their money in Trinidad and they get a poor rate of interest, right? So the reason I show this is because at some stage, we're going to have to change this. And we're going to have to put this here back again, so that people in Trinidad have incentive to bring their US from the US and deposit it here rather than leaving it in the US. So that is something that we need to address from a policy point of view. So what I tried to do here is to show what is happening with banking deposits and our foreign exchange reserves. It's getting to the point where you, the public, have more foreign exchange than us, the central bank, right? In years ago, this used to be us, and this used to be you, the public, right? Today, this is us, and this is you. So your numbers have continued to go up, and our numbers have continued to go down. So when you take into account international flows too, that is what people may have invested abroad, as well as the deposits in the banking system, we believe that this number is probably higher than our number right now, in that the public has more foreign currency reserves than the central bank itself. So in terms of the foreign exchange market, I'm going to come to these issues here with respect to demand and supply, credit cards, retail and distribution, and so on. But we are in an environment that we have to now start to manage where geopolitical tensions are higher than they've been previously over the last 10 years. And the tariff uncertainty that has been introduced, it also affects us. A lot of our exports right now are subject to tariffs and increased tariffs as a result of the decisions that have been made in the United States, right, which makes us more expensive. We'll give you all a copy of this. So, because I don't think, you could really, I could just tell you this and you remember it, or even if you take a picture, it's basically what I have to say is that credit cards were using 765 million a year of our foreign exchange reserves back in 2015. It is now 2,317 million. Now, 2,000 million is plenty money, right? And that's US dollars, right? That we are spending abroad as citizens on an ongoing basis. So this has been a very significant increase. Now, to be fair, a lot of it also reflects movements from other sectors. And what I mean by that is that if you look at retail and distribution, it was 1.7 billion, and it's now 861 million, right? But a lot of it is also now going through credit cards as opposed to going through here. I don't have the data on that just yet. In the process of trying to get more and better data so I could understand what is happening and we could make some better data-driven decisions. The automobile companies, in fact, have gone down from 458 to about 300 million. So there's been a reduction there that I can't put here because I don't think people pay for their cars generally with credit cards, right? It will be so this year would have gone down. An interesting number just to be aware of when I send the data out is that manufacturing was getting 770, and here they're only getting 239. But that is not correct. When I say it's not correct, what I mean by that is there's another slide which doesn't include these numbers, where manufacturers go to the Exim Bank and they use the Exim Bank window. And we provide in total about 50 million a month to Exim, both for manufacturers as well as for what we deem to be essentials that they use the funds for. So manufacturers still continue to get about the same that they used to get 10 years ago, except that they don't get it all directly through the banks. They get another part of it through the Exim Bank, which also affects our own foreign exchange reserves, right? And then we have I've given you all this graph, so it's kind of easier to pick up and see the distribution of the spending of foreign exchange, contrasting between here would be the 2015 number and this would be the 2025 number. But this is just a relative breakout of the different sectors that we're spending in, which is sort of easier to read than probably we should have put in, though Alistair, the percentages might have been make it easier. Yeah, but anyway, and this is where we buy foreign exchange from the market. The biggest part of it is, of course, the energy companies, but then we get the rest of it from different sectors and so on. But again, we'll provide you with that information. I don't need. One of the things, though, is that here in 2015, we were getting about 4.9 billion being sold by the public, and it's about 4.5 billion. But it's been relatively stable, mainly because the top line, which is the energy companies, which are the biggest part of it, that has been relatively stable other than 2022 when there was quite a significant upturn. I think that had to do with commodity prices at the time. Right? So in addition to what we put into the market by way of supporting the banks to be able to sell foreign exchange, this year is, for example, where the Exim Bank facility was started back in 2018. And then we've been providing support to the public sector, and this has continued to grow. And what that is, let me just explain it to you all. This year is what we call the Liquidity Guarantee Facility. And just so I could explain it to you, the Liquidity Guarantee Facility is a facility where we provide some support to the commercial banks when they oversell foreign exchange. So they sell more foreign exchange than they have to the market because there's a huge demand and they try their best to meet the demand as best they could. So sometimes they sell foreign exchange that they don't have. So they're really, in a sense, overrunning their position and drawing on what we call the asset liability book. I don't want to complicate the way it works, but basically they oversell their position, they sell more than they have, and then they have to make it back up. And we help them to make it back up by providing a percentage of the oversold position, because there are all kinds of other risks that are attendant on doing something like that, and we therefore provide some support to the market there. But as our reserves go down, this piece has come down and will continue to come down. So you can see where it was before and where it is today. This piece here, just so you know what we use it for, the yellow piece, basically it's the hospitals, T&Tech, equipment that they need, which if they don't get it, the entire country's electricity grid could shut down. So you need to have that water. So you could have water, if there's equipment or other supplies that WASA needs to ensure that the water supply keeps flowing. Medicines for the hospital, equipment for the... So many times the public sector needs funding that they can't get from the banks. And therefore, what we do is we provide some support to ensure that the public sector can get what they need. And this here is the Exim Bank facility, which we use for essentials, food, as well as for the manufacturers. And this is the gap. So basically, this piece comes in directly to the banks without going through the central bank. A lot of people think that the central bank gives the banks the foreign exchange, and that's what they sell. And that is true, we give some. But this is what we give, right? This piece here is what comes in from the market, directly from the energy companies into the banks. So this goes directly to the banks, which they then sell, and they determine how they will sell this. And this piece is what we give them, and we try to give them some guidance on how they should sell what we provide them with. But the bulk of, because as a free market, this coming into the banks, they are free to sell their foreign exchange in whichever way they choose to sell it. Right. So coming down now to the end, basically, I was intending to make this very short. I might have gone on a little bit longer than I should have, because I was just trying to make sure people understood the numbers that we were sending out, and it wasn't misinterpreted. But basically, going forward from here, how do we deal with the problem? First of all, our problem is reflective of our basic underlying disequilibrium between demand and supply, right? Supply is far less than demand. And as I was trying to explain earlier, if I have $1,000 to share up among, say, the 5 people on that table, and each person wanted 1,000 each, the best I could do, even just to share it equitably, give everybody 200, is the best I could do, because all I have is 1,000. So you will have each person being dissatisfied because they just didn't get what they're trying to get to meet their own needs. And if you give your 1,000 to one person so they could meet their need, of course, everybody else will be very upset about the fact that that person got and nobody else was able to get. So we are in a situation where we can't meet everybody's demand. And even back in 2015, when we had huge reserves, over 10 billion US dollars in reserves, and we had put, as a central bank, about 2.5 billion into the system to maintain some level of stability and so on, we still did not fully meet the demand. So with what we're able to do today with the lower level of foreign exchange reserves, we are unable to meet the full demand for everyone out in the marketplace. And the challenge for us is to determine how each one of us can become foreign exchange earners. And I've seen a lot of people who never thought they could become foreign exchange earners, become foreign exchange earners. Suddenly, even university lecturers now actually earning foreign exchange by doing gigs outside of Trinidad and Tobago, doing lectures outside, publishing outside, and so on. And of course, I understand and appreciate not everybody would necessarily immediately be able to be a foreign exchange earner. But the fact of the matter is that as our oil and gas goes down and becomes less and less, more and more we are each going to have to face the challenge of how do we meet the foreign exchange requirements of the country as a whole. Our role as a central bank is, maybe I could put it in three buckets. The first one is administrative. To try in this period, while we have less than we would like to have, to do what we can to ensure there's as equitable a distribution as possible. Now, equitable doesn't mean everybody getting the same amount, because different people have different needs for different purposes. Somebody who needs to go on a holiday may have a different need. The need could be classified differently to someone whose child is in hospital and needs urgent medical care, needs medicine, and so on. So equitable is not necessarily equal. Equitable is trying to find some kind of mechanism which weighs the risks associated with the different needs and comes up with some kind of a system for distribution. The next thing, of course, is that our distribution is not, the process needs to have a full degree of transparency. I mean, while on the one hand, we can't say that Ria came and we sold her 5,000. We can't call people's name. We can't, because banking confidentiality and so on requires that we keep that confidential. And I think people expect that their business is confidential. But I think we could do more in terms of ensuring there is a better level of transparency as far as that distribution. People understand how it is distributed and perhaps why it is that they're not getting as much as they would like to get. It is about the best that we could do at this stage, right? We need to address some monetary policy issues. Interest rate is one, and I've signaled to the business community something that they don't want to hear necessarily, that interest rates will have to go up. But on the other hand, they want to hear it because many businesses export, and when they export, they say, well, when they bring their money back, you're not getting a competitive rate of interest. So we have to increase the rate of interest so that businesses could get a competitive rate when they bring their money back to Trinidad and Tobago. And they have an incentive to bring it back rather than leaving it outside. So we have more US flowing into the system. Some of that may not be available for sale. It may be for the asset liability books of the banks, but nevertheless, it affords us more flexibility the more that we could repatriate back into Trinidad and Tobago. So interest rates will have to go up. Liquidity will probably become a little bit more constrained. Foreign exchange management may have to become a little bit tighter. Consumption patterns may have to be addressed because the overall level of demand will have to be addressed in some way. You know, there's a lot of agricultural products, for example, that we import from Miami, from Florida, from the United States generally, which we could produce locally. And we need to get our farmers back in business. And therefore, the overall, in terms of how we address consumption patterns is something that we need to deal with. In dealing with consumption patterns, we will have to, and the overall level of demand, there are things that we will have to consider. We haven't made final decisions on a number of these initiatives just yet. As part of my meetings with the business community, with the general public, with the media and so on, is really to start signaling some of the things and measures that we will have to put in place as we go forward. Selective credit controls, for example. What we mean by that is that in the old days, we used to have a restriction on how much consumer lending banks could do. And we used to control it by way of moral suasion and so on. We don't have, I suppose, legislative support for doing that kind of thing right now, but we certainly could use some moral suasion to see to what extent we can limit the amount of consumption. But of course, that is an extremely difficult thing to do in a liberalized economy. As everyone knows, credit card lending didn't exist 30 years ago. Well, certainly in Trinidad, it was very limited. Today, credit card lending is used for both Trinidad consumption and international consumption. So how we control that is something that will require a lot more thought than was required previously when we did have those controls many years ago. So, you know, there are a number of things, of course, that the minister will probably need to announce in his budget speech and will probably announce in his budget speech. And I don't want to venture into areas that he himself may wish to deal with. I am just from the central bank perspective and dealing with the issues that we know we have to manage as we go forward. I thought it was important to provide the information and to say some of the things that we're doing. Will we get it right the first time, the measures that we put in place? Probably not. And we're going to have to adjust as we go along. But, you know, over time, we expect to get to some level that will allow us to husband our foreign exchange reserves in such a way that it lasts as long as possible, and it gives the country enough time to get our manufacturing and services, exports of manufacturers and services up to a level that could sustain the depletion that we are experiencing as a result of the fall in oil and gas prices, as well as the fall in output and production, which we've experienced over the past few years. So I took very much longer than I intended to take. I'm very sorry about that. So let me stop at this point and let me open up for questions from the online audience as well as from the media who are here.
So please use your microphones provided. Just letting you know the presentation will be up following this session. And of course, on our YouTube channel, you will see the actual engagement session. So to the 215 people online, thanks for joining us. And please come forward, say your name, ask your question, and Governor will answer. Yes, Ria.
Can I start off by asking the simple question of whether or not there is in fact a foreign exchange cartel, or is that a sensational term that people use in order to rev up the population on this forex issue?
From our perspective, we have no evidence that would suggest there is a cartel. There are lots of, I've been told that there's a black market somewhere out there. The extent of that black market, how pervasive it is, I have no real data on that right now. I'm unable to say whether, in fact, that is so or not. There's a bit of a gray market. And what I mean by the gray market is that, for example, you may have a house to rent and the ambassador from the Netherlands might come and rent your house. And he pays you the US, but he credits your account in Florida or New York or somewhere. So it doesn't come through. Or it's not illegal, right? So I'm not saying it's black. It's just but what I might call gray. And I don't know if the central bankers here will agree with my description. I'm now learning to be a central banker, right? But basically, you have some areas where foreign exchange legally doesn't enter into the system. What they're doing is legal. It's not illegal. It's just it doesn't come into the system, right? And of course, there is the general distribution of foreign exchange that takes place as a result of what comes into the commercial banks. Most of what comes into the commercial banks, as I showed, comes in directly to them, not through the central bank. The central bank tops up whatever they get, whichever they buy from the market, to make funds a little bit more available, to ease some of the supply constraints that we face. But it is the bulk of the money comes through from the energy companies, from the public directly to the banks, and then that is sold out there. So that's the way I would characterize the market, the different segments of the market. And we have to find ways to incentivize people to move the gray market into the normal market, and of course the black market into the normal market. And those are initiatives that I've only started to consider over the last couple of months, how we start dealing with some of these things. In addition to the normal monetary policy initiatives that we'll have to implement to deal with the situation that we face right now.
And is there in fact a forex crisis, which is another term we hear the politicians using?
Okay. Yeah, you ask some really hard questions. There is a, we are not in the, I was talking, I have meetings with all the business community and so on, right? And one of the guys from South was making the point to me. He said, they buy from different parts. They go to Mexico, to Costa Rica, Panama, Colombia, and so on, right? And when they go into like a pharmacy, he said it's not stocked like a Trinidad pharmacy. The range of products is much less. There isn't, you go in the grocery, the range is much different to what you have in Trinidad and Tobago, right? So sometimes we think Trinidad is the only place that have a foreign exchange. Everybody else seems to have foreign exchange except us. It's not, we have some pretty high consumption patterns in Trinidad and Tobago. And that is reflected when you go into many of the stores here in Trinidad and Tobago. It does well for us, for our community. We have choice, our businesses do well, and so on, right? But we don't have, but other countries have a much bigger problem than we have as far as some of these things is concerned. And yes, we do have shortages and so on, but over time, needs get met. They may not get met right away, but needs do get met. And I think if we introduce some of the measures that we would like to introduce, plus do the additional things which I'm sure the ministry will announce when they read their budget, the new investments that they would want to attract to come into Trinidad and so on. Those kinds of things, I expect those will start to increase the level of foreign exchange available. It'll be a lot easier, but it's not as, there are many other countries which have much bigger problems than we do have. For example, I mean, people say, I go to Jamaica and they don't have any foreign exchange problem. And I go to St. Lucia and they don't have any foreign exchange problem. And I think to some extent, that is at the level of the small individual who want to maybe just a few $100 changing hands and so on, right? But to sustain our economy, the demand for foreign exchange is well over 6,000 million US dollars a year. Now, for demand in the street, 6,000 million US is an inconceivable number. We don't even know what that number is, right? We can't even think of what it looks like, right? But that's the amount of foreign exchange that is sold on an annual basis in Trinidad and Tobago. About 4.5 billion by the which the commercial banks buy from the well, let me see if I have it on this slide. Kind of shows some of it here. So the total here is just short of 6 billion on this side here, right? It's just short of 6 billion, which is 6,000 million US is sold in Trinidad and Tobago. That is more than all the rest of the islands, including Jamaica, combined. And we're doing all of that here. So there is foreign exchange, but there's huge demand. There's huge demand in our retail and distribution sectors. As I said, I showed you all how it's broken out, right? And how it's sold to the different sectors, right? The different sectors here. Retail and distribution, the credit cards, the manufacturers, automobile companies, and so on. Going down the line, insurance companies, insurance companies need foreign exchange to do their reinsurance business. And they do hundreds of millions of dollars. They do billions of dollars of reinsurance business. And they pay hundreds of millions to reinsure the amounts that need to be reinsured outside, right? Because, all the properties that are insured in Trinidad, all these things, it costs a lot of money to, if we have a disaster, no single insurance company could meet the requirements. So they all reinsure it outside. So this is how, and you come up with the total here, 5,899,000,000, 5.9 billion, close to 6 billion, which is the figure I showed in the previous graph. So this is what we consume on an annual basis in Trinidad and Tobago. And this is how it is broken down in terms of the consumption patterns that we have. Yeah.
Morning. Morning, Governor.
Yeah.
Anthony Wilson from The Guardian. Are you, as the governor of the central bank, committed to maintaining the exchange rate where it is?
Well, that is not a question for us. That decision is made across in the other tower. We provide a lot of guidance on that in terms of information that could be used to determine what the real effective exchange rate could or should be. We do different scenarios. We do computations on the effect of any possible change in things like inflation and that kind of stuff. We do all the work that is required, but it's not a decision that we make. There's a policymaker's decision made on the basis by the people who was elected to make those kinds of decisions for us, right? So we don't venture into that. We provide the information, and we leave it to the policymakers to decide what is best, given the the entire ambit of all the things that are affected by that decision, right? There are some things that will be positives and some things that will be negative, and they have to weigh the entire suite of issues that needs to be addressed.
Yeah. You said on several occasions this morning that the system can't meet everybody's demand for foreign exchange. Left out of that statement is can't meet everybody's demand for foreign exchange at the ceiling of $6.799 to one US. Yes?
Mm-hmm. Yeah, because as I said, that piece we are not able to address. So if, we prefer to leave that aside, and we could just talk about what we're seeing in terms of demand and supply.
So demand is 6 billion, supply is about 4 billion. Are you saying that the central bank provides the balance?
Yeah, we provide this is the So if you take this piece and put it here, you get close to, so it's about equal. But it's not really the demand, Anthony. It is really the supply that determines what graph I could put for demand. Because the demand could potentially be here, except that all I could sell is up to here. So this is the demand that I'm meeting, right? So I could only, we top it up and we put about 1.2 billion US in to make up the difference to get us to where we are right now.
So that 1.2 billion plus the money to the Exim Bank plus the public sector facility equals how much?
Could guess about close to 2 billion, I suppose. 2.2.
And that 2.2 billion comes from the country's foreign
exchange reserves. That's right.
Yeah.
That's right.
So let's talk about foreign reserves for a bit. I did a calculation that in the last 3 years, Trinidad and Tobago's net official foreign reserves declined by $2 billion US. Over a 3-year period, that is annualized at 669 million. And if the foreign reserves are 4.816 billion as at August, if we continue to deplete foreign reserves at 669 million a year, we will be just over $2 billion in 3 years. So the question is the current system of foreign exchange allocation sustainable?
We prefer to look at it a different way. What we look at is, okay, we have the cash flows coming in, and we also look at, tell us also, government, what are some of the initiatives you have in place that would address some of the cash flow problems that we face, right? Now, some of it may be longer term that wouldn't give us anything, and some of it may be shorter term, such as, for example, you say, okay, we need to access the foreign market and the US market, and we would probably bring in a certain amount of US coming in. So what we do is we do a computation we do a cash flow computation, inflows and outflows, and we do project it out over between 3 to 5 years. And on the basis of that, we then determine how quickly we need to adjust monetary policy. In other words, if it is that we see, and we have triggers that we identify, right? So we come up with different triggers for at what stage we think we need to start doing other things because, okay, the government says so much will come in, but we didn't see it come in, and therefore we're hitting a trigger that requires us to do something else. So we do, in fact, have a very detailed approach to how we manage this as we go forward, right? Our figure doesn't suggest the same number as you quoted just now, which is why I say, okay, let me suggest, that, okay, we need to take another look at it. But
So it would be more than 69 million annualized?
you're suggesting it will be 2.2 billion in 3 years or something like that? Yeah, our projection is a little bit better than that. Yeah.
Okay. You mentioned, I want to see the flow after this question, but you mentioned increasing interest rates in order to attract US dollars by reducing the differential between TT dollar treasury bills and US dollar treasury bills.
Mhm.
How do you increase interest rates when inflation is at 1.5%?
Yeah, we've considered that, and in a sense, we have to ask ourselves. Central banks have a couple of mandates around inflation, growth and unemployment, and so on. But I decided I'm going to write a different textbook. I always tell my managers, my textbook different. I think foreign exchange. Without foreign exchange, all the rest of stuff wouldn't matter. And I think I would like to make foreign exchange, the triggers for foreign exchange, probably the bigger trigger as far as determining the kind of policy decisions we want to make. And if in fact a higher interest rate here, does, both in TT and in US, helps the foreign exchange position, I would want to consider how I might be able to use that, those triggers to achieve what I need to achieve. So higher interest rates locally will probably reduce demand for loans and demand for consumption. Selective credit controls, if we could get it to work in the current environment, will also limit the amount of lending into consumption. And also, a higher interest rate may be able to bring some US dollars into the system. And as I say, and we need to be mindful of the fact that dollars coming into the system because of interest rates may not necessarily be dollars available for somebody to buy US or to use on a credit card or anything, because the banks maintain two different books. One is the asset liability book, which is your loans and your deposits. So if I bring a deposit back, if you came to the bank, I get different stories about this, but you come to the bank and you make a deposit. Down the road, if you have to withdraw a deposit, we have to be able to give you back your money, right? And if we sell your money to somebody, when you come to get your deposit, we have to tell you, boy, we just sell it to the fellow down the road, we ain't have no money for you, right? So the banks keep an asset liability book that is separate from the trading book. And the asset liability book is well managed and balanced. And we, the central bank, monitor that carefully to make sure that they maintain the right kind of liquidity and the right kind of asset liability mix inside of there. And it's much more technical in banking terms than the normal buying and selling of the foreign exchange, although in that you also need to manage your risks and your exposure. But yes, the interest rates will allow us to bring some more US into Trinidad and Tobago. It may not necessarily be available for buying and selling. They go into the asset liability book because it may come as a deposit because it was attracted by a higher rate of interest. So just to clarify that point.
Hi, Mr.
Yeah.
Hi. Check, Mr. Hawai. Hi, Mr. Hawai. Gregory McGraney from Trinidad Newsday. You mentioned just now some of the measures that you all have planned. Have any of these measures been fleshed out significantly enough to be implemented in time for the budget? And if not, what are the timelines you all are looking at for some of the measures that you mentioned just now?
Yeah, good. Yeah, no, there's still a lot of work to be done on that because it may require some legislative changes because some of the legislation that we have deal with a different kind of free-flowing foreign exchange environment and not one that, in a sense, is kind of a very managed float. Now, notice the words have morphed a little bit, right? We used to say it's a managed float, and I just said it's a very managed float. So so we need to be mindful that some of the legislative capabilities we have may need some adjusting, and perhaps some of it may come into the finance bill, which will probably be read early next year, in I presume either December or January, because that normally succeeds the budget. After the budget is read, then they get to the Finance Act, which is the real budget, right? I mean, we listen to the budget for the policy measures, but it's only when it gets into the act, and it then becomes law, and then becomes immediately, other than a few exceptional things, for example, you change the price of gasoline, for example. I'm not saying anybody's going to do that, just giving an example, right? That is something the minister could sign overnight. But generally, the changes that are in the budget, a lot of them require legislative change that takes place in the finance, is laid in the finance bill, and then which then becomes the Finance Act after it's approved and so on. So a lot of what we're seeing now, part of what I have been doing is trying to get to my social compact, right? That word, right? Yeah. I'm trying to get that feedback from the public at large on some of the policy measures we want to implement. I need to get to understand, because sometimes you sit down here in the ivory tower and you come up with great ideas that sound great, but how it impacts the small man, you have to consider. And in fact, the way it impacts the small man may result in you not getting the results that you were expecting because the behaviors of the people change in a way that you didn't expect, and therefore the outcomes become different to what you had projected, right? So it's important for me to even stand up here and listen to the questions that are being asked, because they give me clues about the concerns that people have, so that in putting together the measures that we're putting together, I could take those into account. So yes, we are bringing these measures. No, I haven't totally fleshed them out because it was part of my trying to get an understanding of issues generally. I expect gradually, perhaps starting from early in the new year when we could get changes into the act and so on, that we could then implement. I could then start seeing some of these things starting to really be effective, probably early in the new year. So basically that's it, and we are always in contact with the banks, try to understand how they see it, what they're doing, how whatever decisions we're making will impact on them. Because I don't want a situation where you have, I remember when one of our former governors had made some changes, there was a lot of pushback from the industry, from generally the businesses and so on. So I want to make sure that we understand properly what we're doing before we actually start implementing things. And as I said earlier, and I repeat, I'm sure we'll probably get parts of it wrong, and we'll have to adjust as we go along. But I think it's part of us getting to a regime that will work a lot better for the people of Trinidad and Tobago.
Okay. You mentioned just now in terms of hearing the concerns of average people, and one of the measures that you raised included trying to encourage people to bring their foreign exchange back to Trinidad and Tobago. One of the issues I think people face is, for example, I tried to open a bank account at a bank the other day, and I had to sign there was a 6-page questionnaire. So I think some of the KYC requirements, people find it to be a bit prohibitive compared to opening a bank account. I have family members who was they just couldn't take it anymore, and they just went to the US and opened a bank account across there. It was done just like that. So these KYC requirements, I'm not sure if it's something that's implemented by the central bank, and is it something that you all are looking at slackening a little bit to encourage people to open bank accounts in Trinidad?
Yeah, well, I'm glad you raised that because, that is a comment we get a lot. And a lot of what we've done have been to ensure that we comply with what is international requirements. But as you just rightly said, sometimes we find the international requirements, we may have gone probably a little bit too far, and we need to consider that. Now, one of the things, is ironic that when I was telling someone when Russia invaded Ukraine and they put all these sanctions and so on in place, it turned out that a lot of people who had their money all in England and so on, who were literally, considered, I shouldn't say criminals, I don't know is the right word to use, right? But some of it was illegal money and so on. But most of the illegal money wasn't in places like Trinidad and Barbados and things, It was in the UK and in Europe and the United States and those places and so on. Abramovich and all that, I shouldn't call no names. I can't pay him if he decides to sue me, right? But, so I didn't call any name, right? But the thing is that, you have all kind of names being called. And, you kind of wonder, well, how come these guys were able to put billions into those big banks? And a fellow here in Trinidad wanted to put $200 in the account, and he get in so much trouble. So I take your point. We're going to try and see to what extent we might be able to deal with the issues around how we can simplify it a lot and make it a lot easier than it is right now.
All right, I know my final question before I let other people ask, open the floor to them. We've seen over the years a rise in the use of cryptocurrency, for example, and some people use it, I guess, to get around the issues with Forex, etc. Does the central bank have a position on the use of crypto and bringing that industry into formalizing it in some way or form?
Yeah. Well, right now, our answer is no to cryptocurrency. But it is not that we are not in favor. You'll have seen the Deputy Governor yesterday, also in the newspapers today, speaking about digital currencies and so on. So until we have a proper framework in place, we wouldn't want to encourage it, but we are actively working to do that. I chair the Payments Council, and the Payments Council involves a lot of different people and organizations in Trinidad and Tobago. Nearly anybody who is involved in payment space is represented on the Payments Council, and we're working actively towards getting a position on that shortly.
Water if you would like. I'm not discouraging you, I'm just offering him water. Jewel, come right ahead.
Brown, TV6 News. Thanks, Governor, for hosting us. I'm just wondering, we're going into 2 key shopping seasons as we go to the end of the year. You have a situation where businesses will be seeking to bring in products for sale. You also have persons who may also be seeking to travel abroad. How does the central bank deal with the policy for the distribution of Forex at a time like that when you have the importation of goods for key shopping seasons, but also persons who may be flying out for vacation or business at the end of the year?
Yeah, well, in fact, even before that, because of course businesses bring in stock around October, November, orders go out, and the other holiday like Diwali happens around that kind of time frame, so you also have a big festival, I suppose, at that time, together with Christmas following right after. Yeah. we tried to see, I've raised the issue of whether we couldn't look at what we inject being adjusted on a seasonal basis. In other words, saying, okay, closer to Christmas, you have it higher. In January, lower. February, maybe could be lower. Carnival, people come in with money rather than go out with money, I presume, right? You know, and as we go along, you know, different things, we adjust seasonally for that. We haven't gone very far with that. It's something that I've sort of put out for us to consider. Right now, I can't say that I have any immediate plans for making any changes based on what we have and what we can put into the market. And I don't want to increase the amounts that I can put into the market at this stage. But if there are exceptional inflows that come in from the government, and the government wishes to use some of that inflow to help ease some of the demand, then certainly that is something we will look at. And it's something that we will have some discussions with them about, because I believe that they expect some exceptional flows to come into them over the next couple of months. So when that comes in, we will, if and when it comes in, we deal with it as appropriate.
As well too, Governor, you also, I would imagine, as you talked about the issue of credit cards, for example, and trying to manage consumption patterns. But how do you deal with that specifically in a situation where, of course, as you say, liberalized economy, people are free to purchase as they see fit. But you also have banks have recently been restricting or putting a cap on the U.S. Limit on credit cards and so on. Is that something you want to see legislated, or should the market determine that on its own?
Yeah, well, I think to some extent, to the extent that a market can do it, and we think that the market is doing it, we will not interfere, right? So it is not, so I want to be clear about that. Our approach to this is better to be, in things like that, market-driven. And therefore, we would prefer to see the banks make the adjustment based on their individual customer evaluations and so on, what the customer could carry in terms of debt and so on, and leave it, let it be managed in that way rather than via legislative arrangements. But we will come up with a set of policy measures so that in the event that we're not seeing things happening in the way we wish or with the speed that we wish, we may have to put specific controls in place.
Would that then affect, because businesses also use credit cards, for example, if there is any sort of legislative intervention, can that also have a wider impact on economic activity?
You could have a spillover effect, yes. If the demand, the ability of suppliers, of businesses to be able to maintain sales at a certain level, it will impact. So we, in making decisions, and perhaps the Ministry of Finance also in making decisions, have to determine whether the effect on the foreign exchange is such that, because remember, we need foreign exchange for everything, for medicine, for equipment for the hospitals, for the water to flow through our pipes, for electricity in our homes, for telecommunications, I mean, we all use our phones and we assume, well, that don't have any foreign exchange implications, but I mean, the only way you could call overseas and the only way you could, access the internet and all of the things happening there and so on is because there are all kinds of licenses and other types of things that have to be paid and so on, right? And therefore, there's foreign exchange demand in all these areas. Food, for example, another important thing, and others like tuition for students who may be studying abroad, who may be abroad, and so a number of areas that we need to make sure. So if it is that we get to a point, and we haven't touched in all the discussions I've had today, we haven't touched our Heritage and Stabilization Fund, right? And we don't intend to touch that. Our intention is to fix this problem. not to deal with that, right? But I'm saying that, if it is that we find ourselves in a situation where we have to choose between maybe a small business importing something, donuts to sell in Trinidad, we prefer to say, well, no, we prefer to use our money for the hospital or for WASA or for TNTEC or whoever else. So we may get to a point where we may have to make that kind of decision. We're not there just yet, but it is something that we need to bear in mind as we go along, based on how we see our policy. Now, this is just an introductory discussion I'm having. I mean, as we go along and we start to implement things, we're going to call you back and we're going to say this and we're going to say that and so on, right? The interest rate movements, we probably wouldn't do it with immediate effect. Let's see what comes out in the budget. Let's see what the effect is on liquidity in the system, on fiscal flows and so on, and then we'll make a determination. So, don't expect that at the end of the month we get up and we say, well, interest rate is going up. We're not doing it that way. But we will have continuing interventions with the media and with businesses generally as we start to roll off the package of measures that we have.
I just want to follow up on a point you made earlier where you essentially encouraged as many people in Trinidad and Tobago as possible to themselves become earners of foreign exchange. You gave one example of a professor doing, as you said, gigs abroad and bringing in foreign exchange, but what other suggestions do you have for persons to be able to themselves become earners of foreign exchange?
Well, even guys like yourself, I mean, podcasts and, all kinds of things could be done, which is a generator of foreign exchange too, right? Agriculture is an area which has tremendous potential, for export possibilities and so on. And one day, years ago, I was at a seminar, sitting to this guy from Idaho or Iowa, one of those places in the US. And he said, we were right in the Hyatt, and he said to me, he always wanted to come to Trinidad because his mother is a big pepper exporter out of Iowa or wherever. And she exports Trinidad, what was it? Scorpion pepper. And she was a big exporter of Trinidad scorpion pepper from the United States, right? And he just wanted to come here to just see this place where the scorpion pepper came from, right? But we never got to the stage of doing what they were doing in the United States, for example, right? One day, I was doing a bond issue for the Republic, and I went to this meeting in Boston, and it was a early morning meeting, 7 o'clock in the morning. The guy started early and so on. And so we were doing our pitch, and hand the fellow the presentation. Had a bird on it and so on. I wouldn't give you the story with the bird because there's another story that could be a little embarrassing. So he looked at it and he said, well, I'm an ornithologist. And he said on his bucket list, he wants to come to Trinidad because he heard there's a place called Isarite. And he wanted to come to this place because you could see most of the birds in South America if you come there, right? Now, that was news to me. I didn't know it had so many bird species you see in Trinidad, right? But he wanted, and he studied a singer, and he wanted to come. And we were doing a $500 million bond issue. And when we put out the bond issue, he bid for the whole $500 million. We tell him you can't buy it because we want to spread it out. We want everybody to own the bond. We want a wide dispersion for the bond issue, right? But the kind of capital these guys have, and if you become a name just off the top of their heads as a country, right? Is a lot of things that you could end up. So while the guy might only come here and look at birds, when he goes back, if something comes up involving some kind of investment or something, and you're going to say, you know, boy, why don't we think about Trinidad? You know? So there's a lot of spin-off and a lot of stuff that we don't pay. I mean, there are other stories, but I was supposed to finish this at 11 o'clock, and it's nearly 12 o'clock. But so I wouldn't go into it, but there are a number of things that we could do. And a lot of areas, a lot of it would start small. A lot of it wouldn't make you millionaires overnight. A lot of it wouldn't bring millions and hundreds of millions of US immediately. But over time, as we start building on it, you're going to start seeing a lot of flows can come from a lot of initiatives that the small person could do. And the great thing about the internet is that it unleashes the power of the small person. You know, you could do your own podcast. You know, you could do your own lectures. You know, people want to know about the Caribbean and what the Caribbean is happening in the Caribbean. You could do your own things and so on. So there are lots of things that could be done. You know, I would certainly like to think that as we sit down and we start looking at the way forward, we come up with a lot of opportunities and possibilities.
So one other thing again, if you don't mind. The administration presently in office, the government has been looking at the potential reopening of the state-owned oil refinery in Pointe-a-Pierre. Of course, you've heard the political conversation about whether the closure would have meant one impact on foreign exchange or the other. Does the potential reopening of the refinery in itself also lend to some relief in terms of the present forex situation in Trinidad and Tobago?
Potentially it could. I mean, in the figures that we'll give you, you'll see energy companies buying and selling US. So when I say about energy, I thought the energy companies only sell, they don't buy. And then I realized that, you know, it's between Paria and Heritage, one imports, and so you have to pay for that, and then the other one exports, and then you get a net figure for yourself, which is not as big as I would like it to be. I think there's opportunity for it to be bigger. Whether we will get more from the opening of Petrocha, I can't say. I don't know what that will look like at this stage, and what will happen and what the throughput will be like and so on. I can't say. We need to see how that goes forward, but there is a potential.
I ask one final question? Oops. Okay, are you all hearing me?
Yeah.
Right. Looking back at the last 10 years or so, would you say that there have been errors in the management of the foreign exchange situation, and that there were failures to make appropriate adjustments based on the economy and the way it was evolving?
Anthony passed that question to you. I'm just joking. I mean, there's always room to do things better, but of course you're asking me a political question, and the central bank prefers not to become involved in political discourse. We may eventually one day end up doing that, but I would prefer to avoid that. I would say, yeah, okay, there's always room to do things better. We could look at and see what opportunities there may have been, but for me the issue is not what we did as much as what you are telling me, what we're going to do, right? You don't really want to know, well, you know, well, we should do this or we should do that. What you want to know is, well, this is where we are. How are we going to fix this problem going forward? You know, we're hearing for the last 10 years that we're going to diversify the economy and, you know, and so on and so forth. When you guys going to get around to getting it done? So I think that's the approach we'll have to take. We'll have to see how it goes forward from here.
Governor, last two questions from me. In response to an earlier question, you seem to have ceded to the government the issue of the exchange rate. But the mission of the central bank is that it should maintain exchange policies as would foster monetary and stability and public confidence. So are you sure that an exchange rate with a ceiling of 6.79 is fostering public confidence in the economy?
Well, what I would say to that is that in looking at, well, first of all, yes, it is true that the government makes the decision with respect to how they think that rate should be. Our policy decisions are around all the issues that affect. So, for example, if you have a rate of 6.79, to use current rate, what is the kind of intervention we need to make in order to, in both interest rates, liquidity management, the market interventions, and so on. In other words,
2 billion.
Yeah,
2 billion US a year.
Or what you, for example, if you look at Mexico, for example, Mexico has a rate that is much more floating than it is now, right? Than our rate, right? But nevertheless, they do come in with a small amount, and if it needs to go beyond their band, they allow it. But basically, they try to keep it within a band. And the reason why governments try to keep it within a band is that too rapid a movement away from any particular rate could create significant distortions for the economy that you don't want to see happening right away. And I expect that what is happening, policymakers are looking at how is this going to affect the small man, right? And how is it going to affect the ability to live at a basic level and so on. And those are things that I think they will need time to consider carefully. And over time, I suppose, they will try to roll out different initiatives on their side as we roll out on our side to see how we could get to a level that minimizes the disruption that comes from an exchange rate adjustment.
Yeah, and final question, is it...
Oh, by the way, Delisle Worrell, I think it was, is it Delisle Worrell, has argued strongly for a stable exchange rate, which Barbados has kept for...
Forever.
Yeah. I remember in the 1990s, they were all arguing over it, and they put a social compact together, where they all agreed, labor, business, and the politicians representing the small man and so on, we're going to hold this rate where it is. We have a little bit of pain, but we're going to hold it. We will come out of this, and then we go forward. And Delisle has argued very strongly that small countries should not have a freely floating exchange rate. But that's a different, which we can sit down and talk about in a lot of detail at another forum.
Is it legal for a commercial bank to withhold my deposits?
No.
It's not illegal?
No. No, it's not. They cannot.
It's not legal.
They cannot withhold your deposit. Let me say it in English.
In other words, you are suggesting increase the interest rate infrastructure in order to attract US dollars. So let's say I bring $10,000 into one of the banks on Independence Square. But next week I want $1,000 US in cash. The branch is going to tell me, we don't have any cash. But that's my money in the bank account.
Yeah. They give you a check.
How do you satisfy that?
Yeah,
how do you reason that?
Yeah, no, they should have more cash. And one of the things that we will ask them to do coming up in the next few interventions and so on is that they have more cash available. It's something we're going to ask for because I think particularly in the small branches out in more remote areas, so you have you're in Rio Claro, and you see banks look at their profitability. And I have a difficulty with that, but they have to also look at their ESG, right? Their social responsibility thing too, right? And cash is expensive, right? You have to insure it, you have to store it, you have to, so you have to build a vault to put it in, you have to insure it, you have to transport it, and so on. So nobody wants to have cash, right? You go to the US and you want to rent a car. If it tell you it's $200 for the day, but not in cash. Cash is not acceptable, right? Pay for it with a credit card, right? They will not give you a car with cash, right? So cash is something that businesses try not to have, right? But you have a social responsibility too. When people come and they want to take out their money and they need a bit of cash, you should have some cash to give them, right? So one of these things we will ask is that, listen guys, particularly in those remote areas, you see, here in Port of Spain, if you don't get it on Park Street, you might go down by Independence Square and get it, right? Which is inconvenient, but you get it. In Rio Claro, you had to go Pinal or somewhere else to get it, or Mayaro or somewhere else, which is not an acceptable kind of situation at all. So we agree with that, and it's something we're going to ask them to. In fact, part of it will be in cash. I think we want to do part of it in cash, if I remember correctly. I think. Wendy will have to tell me.
Hi, Governor Howai. My final question as well. You mentioned just now the hesitation about having cash. And I mean, we've had the debate about, a cashless society and moving in that direction. What role does the CBTT play, if any at all, in developing that framework in things like Zelle and Cash App and Apple Pay and that sort of stuff?
Yeah. No, that is a big priority for us right now. The whole question of digital currencies and digital payment systems and so on. So that is something that we're actively looking at, seeing how best we could develop the framework. Because the other problem is that coming with these things, fraud comes with it too. The people who are into fraud, they're sitting down every day figuring out how to do more fraud, right? Yeah. So we need to make sure that we have the right kind of policing framework and the right kind of legislative framework and so on, so that when you catch the people to it, not like you catch them and you can't do anything with them, you also have penalties that you could apply and so on, right? Okay. So be in the process, but that is a high priority area for us.
Yes, well, you said it's a high priority. Has the bank set itself any sort of timeline? Because, I mean, the rest of the world is moving ahead, and, we still here. Yeah. So have you said, well, okay, 1 year, 2 years, 3 years?
Some approvals have already been given. We Pay, for example, is one which have the payment system. I think we have a couple others, right? I don't remember. There are a couple others that we have implemented on a more controlled basis. But yeah, to open it widely and so on, we just need to get, and probably during the course of next year, hopeful that we could get the legislative, because you then need to make room on the legislative agenda of the government. Because the government is the one that lays it in Parliament, debates it and passes it and so on, right? So we need to get that approved in Parliament first before we could really roll it out in the way we'd like to. A much more wide-scale kind of a level.
So if you have your way, by next year Christmas, I should be able to pay for things with Cash App?
Perhaps. Let's see. Let's see. Hopefully.
Okay.
Yeah.
Just winding down now, and Governor, just to let you know, the questions that have come through the chat mirror a lot of what we discussed here. So, of course, people are asking things about, like Anthony asks, if you adjust interest rates, what would happen? What would be the impact on the economy, on employment, and those kinds of things? So you spoke to that. And people also asked, why are we allowing the use of Forex for cereals and milk and so on, when we have things here from Nestle and Sunshine Snacks and those kinds of things? So those are the questions that are coming in for us to, for us to sit and consider as we determine a way forward.
Yeah. Well, we wouldn't want to have the negative list and so on as we used to have. Is increased duties and taxes a way to go? These are some things that we will have to look at. But I fully understand and appreciate the question and the context in which the question is being asked and how it's being asked and the importance of the question. I do agree that, yes, it's an issue that we need to look at. Yeah.
That looks
okay,
like it.
Thank you all.
Thank you very much, everyone. And remember, everything is available subsequent. Enjoy the rest of your day.
Thank you.